See, that's what's weird is like, there's been a lot of hoopla about the short-term rates, but the long-term rates are staying like high. I think what people, you know, so much about like what Trump wants to do is to fix the housing problem, I
Yeah.
think. He's like a real estate guy. I think it's so helpful to remember that Trump's a real estate guy, and like the art of the deal and all of his, he's just like he's a real estate guy. His the portfolio of assets that him and his family are building right now are just like way beyond just real estate, right? Um, but at the core of like what he knows, what he spent his career doing, it's real estate. And at the same time, it's just it's the housing market in the United States is I don't want to say broken necessarily, but these
It's
high
locked
mortgage
up.
rates, it's just totally locked up. That means that people have equity in their homes, of course, but it's like when we're working with clients, if somebody's trying to buy a new home and they're using a mortgage, it's just brutal, right? And there's people who are there. There's a sliver of the segment that of the market that can just pay cash or just have huge incomes to be able to do this, to buy homes, or they're sitting on the equity and they're like, sweet, we've got a lot of equity in our home, but like, what if we need to buy another house, or if our family needs to move? Um, the housing market is like totally locked up.
Yeah, an interesting take that I'd heard that I actually think is somewhat true was that the mortgage rate market, banks are keeping those rates high when they're underwriting these deals because of the perceived prepayment risk that could happen when interest rates fall. So they're trying to what they're basically trying to do is they're trying to like, okay, well, we know that we're going to have this prepayment drag on income. So we're going to try to front load that in the beginning by issuing higher rates now. And when that happens, everybody's going to refinance because if mortgage rates fall by 2%, they're going to have a wave of refinances. But we'll have already collected the interest that we would have to basically cover this. So
Interesting.
like what could happen here is like Fed cuts rates, the spread between the treasury, like a 30-year treasury and a 30-year mortgage, starts to come back down to normal levels. Because right now it's high. Like it should not be at
Yeah.
2.5%. It should be more like 1.7, 2%, something like that. So there's like
Hmm.
there's room for like 0.8% to 0.5% of room to like come down on the mortgage rate market. Um, what needs to happen first is those short-term rates need to fall. The rest of the long-term market needs to fall for that to really take place, for the banks to have confidence in issuing those lower interest rates on the mortgages, which would free up a lot of money inside of the housing market.
Yeah. I spend I think this was something my dad taught me, like, why is we people talk about mortgage rates so much. People talk about housing so much. And I've spent a fair amount of time over my career thinking about like why is this such a big deal? Like why are people so obsessed about this? Until you buy a house, until you realize just the economic activity that surrounds housing. And while it is it is annoying to be an American in some ways because of this. Like I was talking to a guy down here. He's moving to Vienna. Um, uh, just happened to run into this guy in strike of conversation, and he just made a comment. I know that's super random, right? Like you were talking to a guy moving to Vienna. I was like, yeah, it was random. But he's like, there's buying a home in Europe, for example. Um, he was like, you can't. He's like, there's not like realtors per se, or like there's not like an
Hmm.
MLS, there's not like a Zillow. He's like, everything's private. It's just difficult. And just from the work we've done with clients too, international, if they're living overseas for a time, or have kids overseas, just the market is different. And so I think like our commitment, to housing, and just the importance of housing and the importance of getting this right. And you think about like, who who has equity in the housing market? It's older people, right?
Yeah.
Like it's
Yeah.
people who have just been in their house for 30 years. And like we know, and we've said this so many times in the newsletter, we've said it so many times, it's like the ticket to financial prosperity is like 360 mortgage payments and 700 401k allocations, which is like, two allocations, two contributions a month over a career, right?
Yeah.
Like it's not the volume is high, but like that's the ticket, right? Um, but the housing market, like it's for young people, right? Like I think the people who have had their homes for a long time, who are sitting on a lot of equity, they're not like um they're not spending as much money, like getting young people into homes, having extra bedrooms for kids, making it more affordable. That is uh only a good thing, right?
Yeah.
Because I think right now, I think about this, like I think it's 17 workers. I don't know the data on this right now, because this is probably a couple years old, but as of a few years ago, 17 workers were supporting one Social Security recipient.
Yeah. I think it's around there. Yeah, still.
Yeah.
Or maybe
So
higher.
like you think about like how important it is for us to get housing right. So that's why, all these bankers and policy members from around the world fly in on their private jets to Jackson Hole, um, to talk about this stuff. Is it really really matters.